Hello, my name is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up and ready for you to watch. Now, if you're not on my free email list, click the link you see in the description for this video to join it, because then you'll get my free stock market updates that come out every trading day before the opening bell. Now, we're in an interesting time in the markets. We've seen an increase in volatility when it comes to technology stocks, and we've seen a further consolidation in the price of gold over the past couple months. We've also seen interest rates on the treasury bond market tick up. The bonds are falling and yields are going up. Commodities are also going up. Oil is going up. So we're in just last week, we found out that the CPI data showed an annualized 7% increase, the biggest increase since 1982. At the same time, the day after that, producer prices, they went up a whopping 10%. The trend of inflation is an underlying trend when it comes to the financial markets that you need to adapt to and adjust to. And if you've not done that or even thought about it, you need to think about that. I think that's going to be the key to beating the markets over the next year and the years after that. But people think in short term, what is going to happen tomorrow, and what's going to happen with the Nasdaq and all these popular fad stocks, because that's what almost everybody who watches stock market videos on YouTube is invested in trying to trade. They're not trying to trade gold. They're trying to trade many of the stocks that make up the top 100 Robinhood list, or buy into things such as the ARK ETF. So what is going on with all these things? Well, I've been negative on them, but I do think, despite that, that we could actually see a rally this week in them. And let me explain why. I got to show you what I'm looking at. But one of the key things you got to understand is that earnings season is going to start this week with bank earning stocks. Then you'll see, I think we'll see, this is the CNBC website. We got Bank of America, Goldman Sachs, Netflix, in transportation stocks. Now, the article says it's going to be a big test. What the earnings do is a big test, a big question mark, so to speak. But I don't really think that's the case, because almost always the stock market actually rallies in the first couple of weeks of earnings season. And then we'll have some selling as it comes to an end. And I think that pattern is likely to repeat, despite this sort of uncertainty they're putting out there. The reason why is because earnings are designed to be beat. The companies tend to to guide the analysts into making estimates that the corporate CEOs and board members know they'll be able to beat. That way, it will create positive news. CNBC and other financial outlets don't have the time to look at the balance sheets and really dig down to what's going on. So they just look at the headlines. They generate headlines and talk about that. And by creating purposely low earnings estimates or guiding analysts to do that, it thereby gives the CNBC reporters things to say. Earnings are beat. Earnings are beat. The companies can lose money, and that will be talked about, but the earnings can be beat. And that can help the stocks actually go up for a short period of time. So that's one of the trends in the market you need to understand, and why I think the market can actually go up this week. But the chart price action is more important, and the chart price action suggests the same thing too. And that's what we really need to focus on. So this is the Nasdaq, and the Nasdaq did peak in November, and it took a tumble the first couple trading days this year. However, it hit the 200-day moving average early this year, and then it bounced. It came down last week to fall on it, but it finished Friday above it. So this is a potential double bottom off of long-term support. The 200-day moving average in a bull market and even a topping market acts as long-term support. Markets tend to bounce or rally off that level. So in here Friday, we hit it and finished the day up. Now in a bear market, the market will, or stock or ETF, whatever you're following, will tend to trade below it, and the moving average will curl down. But the moving average here it's not in a huge uptrend, but it's starting to flatten out. And the Nasdaq itself has been actually lagging the S&P 500 now since February, and that became even more pronounced following Thanksgiving, when this has gone for moments below the 200-day moving average, and the S&P 500 has remained above its 50-day moving average. The 50-day moving average is the blue line. The 200-day moving average is the purple green line you see on the chart. It's sitting at 14,726 at the moment. Generally speaking, though, you don't want to be invested in things lagging the S&P 500. You want to be things beating the stock market in order to beat the stock market yourself. So if we look at the price of gold, as I said earlier, it is in a huge consolidation range. I talked about this in my last video, but I just want to make the point again that it's working on the 1825 to 1830 zone is now short-term resistance on it. And on Friday, it tested it and came down on it. So this is, again, a level I'll be watching this week, because I believe if we see a close above 1830, we'll then see a rally up to the next support level, or resistance level, which is approximately 1880 through 1890, the high of November, and the upper 200-day Bollinger Band. And that might be something we'll be talking about next week. But let's talk more about the stock market. So one of the things that's been going on is the Russell 2000 has been trading sideways and also lagging the S&P 500. And it also has tested, even though it's below the 200-day moving average now, you can actually start to see the 50-day starting to curl down, more negative than pattern here than the Nasdaq. In fact, it also is likely to bounce because it's on support. The lower 200-day Bollinger Band is at 210, and this ETF, which represents the Russell 2000, essentially came down to that level for the third time or fourth time since Thanksgiving, and managed to close up, a close above 214. So it's set up where it could bounce. You would expect to bounce off that level, but this is getting dangerous because the more times something bounces off support, eventually it's likely to break that support, and that would trigger a downtrend. But I'm hopeful that earnings season can bring buyers into the Nasdaq, buyers in the S&P 500, which would help the Russell 2000 have another bounce up into what is now resistance. It's 250-day moving averages now coming together. So this is a move that's likely that, the price setup, the fact we're in earnings season suggests a rally, but the overall pattern suggests that it's going to run into resistance and not really lead to big gains. And that's the kind of overall setup for a lot of the technology stocks. It's a setup for most of the stocks in the Nasdaq, and it's typified by the widely popular ARK ETF, the ETF that's managed by Cathie Wood, who's made herself into an internet celebrity because her fund went wild in the fourth for 6 months, the second half of 2020, but then it peaked in February, and now it's a millstone for people who own it because it's deep in a bear market. As you can see from the indicator on the bottom, that's been going down It's lagging the S&P 500. If you don't want to be in things lagging the market as badly as this does, all that said, it did have, a potential candlestick reversal. It went down on Friday and finished up, which does suggest it could rally, but it's in such a sharp overall downtrend since Thanksgiving that any rally is going to be short-lived. It would be lucky to get back above 90, even to hold above 85, but it's likely to at least get above 85. But look at the moving averages now curling down. And that's the classic stage 4 bear market action for these moving averages. It's even below the lower 200-day Bollinger Band. So this is an ETF which should be sold on any rallies. And if you own the individual stocks in it, they also should be sold. And let's look at one of the top stocks in it, and that is Robinhood. The Robinhood stock, is sitting right on a 52-week low at 15. It opened up at 35. It briefly hit 85, but it's been in a down spiral ever since. And it's sort of like if that ARK ETF looks like this did in November. It broke down through the lows and just sat there. The moving averages begin to curl down. And this shows you the danger of holding something that's in a bear market downtrend. It shows you the danger that ARK ETF investors are going to face this year. But the problem with Robinhood is that it's the stock falling like this suggests that the market believes Robinhood itself has a shaky future right now. Its earnings revenue streams come from the number of transactions made in it. More and more transactions equal more profits. Fewer transactions mean less profit. So they seem the stock market seems to be suggesting that there's going to be fewer transactions made among those that own Robinhood accounts. Why? Probably because they're going to lose money. Why? That if we look at the holdings and the way the account itself, the app itself is set up, it's easy to see why. Most of the stocks are deep downtrends. And if you enter and load up the app, I created an account a couple years ago, but I just did something with that account, very dramatic. And let me show you what I did. I made a dramatic change in my Robinhood account. And that is, I completely liquidated it, exited all my money from the account, withdrew it, put it in my bank account. Why? Because I have my real brokerage account is very large, and I'm focused on that. I opened up the Robinhood account just to understand how it works. And after looking at it, it has come apparent to me that this app is a complete, useless for trying to make money. It's a waste of time. The only reason I keep it now is in order to look at these lists that they feed people. You see, they don't give you any real information. If you open up an account and use this as your main way of access to the markets, you don't have real charts like I just showed you. You don't really have real investment ideas. There's no fundamental information on the companies. Instead, what you get is this. This is the home page, trending lists. So what happens is when you open up these lists, they're guiding you into these sectors. They want you to invest in altcoins, index ETF, crypto, cannabis, technology, Ethereum, Bitcoin. Where's commodities on the list, which is hotter than any of those things? Where are real estate? REITs are hotter than any of these things. Where are bank stocks? Hotter than any of these things. Instead, what's the person supposed to do? I'm not being guided into good, stronger things beating the market. I'm being guided into these fads. Let's look at this to show you what I mean. Cannabis. Well, cannabis stocks are red hot several years ago, but let's see what's going on with the cannabis stocks that they are trying to guide people into. Hold on a second. I got to get a piece of paper to write with. So let's write down the top couple stocks here. We got CGC, Tilray, Crone, Sundial. All right. So we'll just look at four. We don't have to, they're all going to look the same. I don't need to look through every single stock. So we want to look at some of the other lists. Let's look at the charts. Is this something you'd want to buy? It's in an awful bear market. It's a complete disaster. And Robinhood is guiding people, basically recommending invest in this sector, invest in this stock. Here's our list. Here's the top stocks. And those lists are ranked by the number of people who own the stock. So this is the top owned cannabis stock on Robinhood. Complete disaster. Tilray, complete disaster. All below all the moving averages. What about Crone? What's that look like? It's even worse. Even worse. What about Sundial? What's that look like? It's a dead money stock going absolutely nowhere. That was at $4. Now it's close to 50 cents. So, a loss of 90% of your money if you were unlucky enough to buy at the top. But the biggest and most important list on here is the 100 most widely owned stocks ranked by the number of people owned. Apple is not a disaster stock. So it's good that people own that compared to the rest of the stocks in here. But let's look at some of these. AMC, Ford, Sundial. We already looked at Sundial. We need to look at it again. Microsoft, Amazon, Disney, Neo. Actually, this is quite interesting because I haven't looked at this list in quite some time, and there's less complete garbage in the top 10. So that's interesting. But it's good that people own Apple compared to the rest of them. Apple's not so bad. Tesla's getting a little shaky there, and the valuations in Tesla make it scary to me. Ford's a good one. AMC, though, AMC's terrible. It's in a bear market below the moving averages. Amazon is actually starting to break down. It's lagging the S&P 500 below all three of the major moving averages. Disney, same story. Disney's a laggard in the Dow, below the moving averages. I really have no idea what Neo even is. It's lagging. Lucid is some fad. Well, that's interesting. It's a stock I'm up. It's one of the fad stocks, and it's doing better than most of them. It looks like a short squeeze is taking place, but it's one of these funny car companies. Rivian was on that list, and it's a recent IPO of a electric vehicle company that's not doing very well. The point I'm trying to make in saying all this stuff and talking about Robinhood is there's not enough information in here to make a real decision on what you should trade or what you should buy. And the app is clumsy, and that's why I just took all my money out of it to go and put it in my real brokerage account. I just think, and I cannot recommend people use this app. I cannot recommend it for young people or children to learn how to trade, because they're just going to be teaching themselves to become part of a herd, and that's not what you want to do. You need to look at charts. Stockcharts.com is what I've been showing you, but free stock charts is also something I use to run scans on the market. And if you new, get my book, Strategic Stock Trading, because it'll teach you the top stock patterns I use and incorporate them into stage analysis, which is necessary. It's basically, you want to look at the short-term trend to find an entry point that's aligned with the long-term trend. That's what I think is the key to making money, in focusing on the best sectors of the market, sectors that don't fall as much as the stock market when it does have its dips, but go up more than the market. And that all changes. There's sector rotation that goes on, trends change, and so forth. But to show you the strongest trend now or one of the strongest trends is energy. This is the XLE Energy ETF. What would you rather be invested in, energy stocks or Robinhood or ARK? And if you look at the stocks that are in ARK, they're disasters. Zoo is a disaster. Square is a disaster. Hood is in there. Anyway, a lot of stocks. You can get the list of their holdings. So bottom line, I think we can get a market rally this week. Markets held support. The Nasdaq retested support. The Russell retested support. They did go up Friday. That suggests, that there should be some follow through this week. And we're at the start of earnings seasons, which typically begins a rally. But expect the rally to be tough after this week for many stocks, because they're going to be running into short-term resistance, and it's going to be tough on them after that. So, and then watch gold for a close above 1830, because then we'll trigger a gold rally. So those are the things I'm looking at in the market this week. If you're brand new, if you're seeing me for the very first time on YouTube, what you need to do, hit the like button, and YouTube knows that you like this sort of stuff. It'll tell that, also tell it to show it to other people, and then hit the subscribe button, and then hit the bell, and YouTube will send you an alert the next time I have a video up for you to watch. Have a good weekend. Have a good Monday trading holiday too.